Howdy, everybody. Welcome to Liberty Call. It's Tuesday. It's not Monday because we had a holiday yesterday. It's Tuesday, September 3rd, 2024. Headed into the home stretch of the year. The last, it's not the last quarter. It's the last third. I do everything in thirds for my clients. So it's the first 4 months, the middle 4 months, and then the last 4 months. So headed into the home stretch. For those of you who are clients, we will be talking about estate planning this time of the year. So, be prepared for that conversation. Anyways, I hope you had a good holiday weekend. Astros swept the Royals, which was nice. And then they played like crap yesterday. So anyways, and boy, the Seminoles, my wife is not happy about that. 2 losses in a week. Not, the one over in Ireland was kind of, the game kind of came down to the wire. The game against Boston College on yesterday was just terrible. Plus we couldn't watch it because of the ESPN blackout on DirecTV. So now I don't have ESPN. So anyway, if you didn't come here to listen to me complain about TV coverage and sports, no, you came here to listen and find out what happened in the markets today, right? Yes. All right. Well, so before we get started, if you could do me a favor, yes, you do me a favor. Give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All righty, let's get into the markets for today. A lot of red. Dow Jones was down 1.51%, 626 points, closed at 4936. S&P 500 down 2.09%, 117 points, closed at 5530. NASDAQ down 3.25%, 576 points, closed at 17137. The VIX was up 33.05% today. It's at 20.69. It was up 5 points. Let's see. Canada down 1.3, Brazil down 0.5%, and Mexico down 1.71. Top on over to Europe. Germany was down 0.92%, the UK down 0.78%, France down 0.93%, the Netherlands down 1.29%, Spain down 1.02%, Italy down 1 1/3, Switzerland down 0.95%, and Portugal down 0.99%. So most of the European markets were down about 1 to 1.25%. Russian exchanges split today. The MOEX down 0.71%, RTSI up 0.85%. And the Asian markets, the Nikkei was up 0.14%, Australia down 0.08%, New Zealand down 0.02%. In China, the Shanghai was down 0.29%, the Shenzhen Component up 1.17%, China A50 down 0.22%, DJ Shanghai up 0.18%, Hang Seng down 0.23%. And the Taiwan weighted when it closed on the 2nd was down 0.15%. All right, so the Asian markets were kind of just mixed, 0.25% here, 0.25% there, but it seemed to get worse as the day went along. The Asian markets were kind of the European markets were like and then America was like down the crapper. All righty, well, let's go ahead and hop over to the weekly economic update that we normally do on Mondays. There were mixed results for stocks last week as upbeat economic data and critical Q2 corporate reports shaped the week. The Dow rose 0.94%, the S&P 500 increased by 0.24%, and the NASDAQ fell 0.92%. Overseas markets gained 0.35%. Key economic data. Markets began the week quiet as investors awaited Q2 earnings from NVIDIA, the world's most influential name in artificial intelligence. The chip maker, the second largest stock in the S&P 500 by market cap, dipped on the news, putting pressure on NASDAQ and the S&P 500. NVIDIA is mentioned to show its influence on the overall stock market. It should not be considered a solicitation for the purchase or sale of a company. On Thursday, an upper revision in GDP data boosted markets, although stocks fell later in the day. Friday's personal consumption and expenditures data seemed to confirm that inflation remained tame. Welcome news for investors who are anticipating the Fed may adjust rates here in September. Although the income and outlays was not great because the income was, I think, 0.3 and the outlays was 0.5. So we're losing money to outlays. All right, softer landing in focus. Several pieces of data helped build a narrative that the economy may be coming in for a soft landing. And if you believe that, I got a bridge for you. Second quarter GDP growth was revised upward from 2.8% to 3%. That's an improvement from Q1 GDP, which rose at 1.4%. Some market watchers were concerned about the Q2 revision after pending home sales in July hit its lowest monthly level in 23 years. Meanwhile, the Federal Reserve's preferred measure of inflation, the PCE index, came in at 0.2%. Higher in July, in line with expectations. Core PCE inflation, which the Fed tracks closely, edged up 0.2%, also in line with forecasts. Key economic data this week. Tuesday, we have the ISM Manufacturing Index and construction spending. Wednesday, we have the International Trade in Goods and Services, motor vehicle sales, and factory orders. Thursday is jobless claims and the ADP employment report. Friday is the employment situation, and Fed official John Williams is speaking. And just a few companies are reporting earnings this week. Wednesday is Hewlett-Packard and Dollar Tree. Thursday is Broadcom. All right. Feel smarter? I know I do. All righty. Well, let's hop into the market recap. U.S. stocks fall as tech stocks wobble to start the week ahead of key jobs data. U.S. stocks fell on Tuesday, particularly in the tech sector, as investors returned from the Labor Day holiday and braced for a week with crucial economic data that could influence the Federal Reserve's upcoming rate decision. The market's focus is on the labor market indicators, including job openings, jobless claims, and the August non-farm payrolls report, which are expected to shed light on the state of the economy. NVIDIA led the tech downturn, dropping more than 7% as concerns about slowing growth persisted following its recent earnings report. This decline set the tone for the broader market sell-off in the tech and semiconductor sectors. In contrast, Supermicro managed to buck the herd, rising over 1% after reassuring investors that it does not anticipate any material changes to its earnings despite a delay in filing its annual report. Yeah, they're just like, got their erasers out and they're like, all right, this doesn't look good. No, I'm kidding. No one would do that in reporting to the SEC. Anyways, where were we? The labor market data due this week is crucial for gauging the health of the economy and determining the Fed's next move. A weaker than expected July labor report had previously triggered a sell-off, and analysts are closely watching the August data to see if it confirms a softening trend in the labor market. I mean, they'll put out a good report and then a month later come back and say, sorry, we crossed some numbers up. The decimal point was in the wrong spot, and hey, we actually lost jobs. This is speculation. Don't take me at my word right here. I'm just being sarcastic. Where was I? Some on Wall Street believe that the continued weakness could lead the Fed to implement a larger 50 basis point rate cut in its upcoming meeting, which is on the 17th and 18th, which is, today's the 3rd, so 2 weeks from today. All right, where were we? Here we are. In other news, the United States Steel Corporation fell over 5% after Vice President Kamala Harris opposed its sale to Japan's Nippon Steel, emphasizing the importance of maintaining strong American steel companies. Boeing Company also declined more than 7% following a downgrade by Wells Fargo, which expressed concerns about the company's peak free cash flow potentially not occurring until 2027. All right, so that's all the news there. Got some data to go through. August ISM Manufacturing Index. This comes to us via First Trust. Mr. Nate Gurzy, economic analyst, is the one who put this report together. All right, the ISM Manufacturing Index for August missed consensus expectations, signaling ongoing struggles in the manufacturing sector, which has now contracted in 21 of the last 22 months. Of the 18 manufacturing industries, 12 reported contraction, 5 reported growth, and 1 showed no change. The most concerning aspects of the report are declines in demand and output. The new orders index dropped to 44.6, its lowest since May of 23, marking a continued trend of weakness with 22 months below the 50 threshold that indicates contraction. Meanwhile, the production index also fell to 44.8, the lowest level since the COVID lockdowns. Manufacturers have been managing weak demand by relying on backlog buildups during the COVID-19 pandemic. However, with the backlog index remaining in contraction territory at 43.6 for 23 consecutive months, this strategy is nearing its limit. The employment index further underscores this weakness, remaining near its lowest level since the lockdowns. With only 3 industries reporting job growth and 10 reporting declines. The overall weakness in the ISM Manufacturing Index reflects a broader economic concern, suggesting continued challenges for the sector in the second half of this year. This downturn is likely to result in a result of lagged impacts of the significant drop in the M2 money supply and the repercussions of excessive government spending during the COVID years. Additionally, construction spending declined by 0.3% in July, with notable decreases in home building and healthcare projects. So again, I mean, yes, top line numbers, consumer spending, still is, going this way, on your charts, everything still looks pretty good. But when you dig below the surface of the sand and you start looking around, it's like, man, there's a lot. The foundation under this house is falling apart. It's got cracks and, it's sinking in one spot and it's got a tree root pushing up in another spot. So we shall see how long it takes for those effects to be seen in the regular economy. All right. Last up, Mr. Brian Westbury's Monday Morning Outlook. This week's article was titled Celebrating Workers. Probably has to do with Labor Day. So let's see what he had to say here. Labor Day, celebrated across the U.S., often features speeches praising hard work and workers' contributions to the nation. It's a republic. It's not a nation. As well as government interventions that supposedly improve workers' lives, such as collective bargaining rights, minimum wage laws, and regulations on working conditions. Yeah. I think kids should be starting work at like 10. It creates work ethic, and kids are just too lazy today. I mean, most of them don't have jobs till they get out of college, and they've never had to bust tables or collect grocery carts or bag groceries or be a cashier or anything where you have like customer service experience, which those skills are extremely valuable. You don't think about it when you're 15 and you learn how to be polite and talk to people, but those things carry on. I mean, anyways, where was I? This perspective emphasizes the role of government action in raising living standards for American workers, urging them to support politicians who promise further improvements. Politicians are liars who just steal your money. However, the argument presented here suggests that free market capitalism, rather than government regulation, is the true driver of rising living standards. That's what I would say. Workers' compensation and productivity are seen as dependent on the ability of businesses led by entrepreneurs to innovate and effectively convert labor into goods and services. Education and well-managed companies are also highlighted as key factors in increasing worker productivity. The piece argues that Labor Day should be a celebration of free market capitalism rather than labor unions and government interventions, which usually screw stuff up. Pardon me. It calls for vigilance against obstacles to the free market, including government expansion through increased spending and regulation. Labor Day is contrasted with May Day, which is celebrated in some countries as a workers' holiday, but is seen here as a means for intellectuals to rally workers as a class for political gain. This perspective suggests that true prosperity for workers and entrepreneurs alike arises from free exchanges without interference from those who claim to know better. Nice, Brian. I like that. All right. Well, that's everything that I had for today. If anyone needs anything from me, hold on a second. I got to get over here. Go to DSAFinancialGroup.com. Yes, that's where you can go and get all your financial needs taken care of, from financial planning, retirement planning, education, tax strategies. Say you got some oil and gas royalties and they're killing you on taxes. Give me a call. I'd be happy to help you with some strategies on that. All right. Well, I hope everyone out there has a wonderful evening, and I shall talk to all y'all again next time. Adios.